just love that little tune. It almost reminds me of Dr. Dre. Almost makes me want to bust a freestyle, but I can't, so we won't even go there. Good morning, everybody. Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. We're going to take a look at a few assets, see what's going on before the market opens, and see if there ain't a trade out there to take. I have my eye on oil for a brief second. Let's see here. I was looking at taking a short on it, but then I noticed that it's at the bottom end of a range, so probably not going to be looking for shorts on that. So we'll see what happens. We'll see if oil can catch a bid back today. We are looking to get long oil, but the problem is it's got to give us a setup. Bitcoin coming off the highs yesterday from quarterly supply. It's as simple as that. Traded right up to that. We waited till the market opened at 9:30 a.m. yesterday, Eastern Standard Time, and we just simply waited for this little trappy trap candle right there, and I took a short. Boom, hedges in. And so I'm sitting in that short, and I'm not, this is not a trade, so it's not a full-size position, nothing like that. It's just a hedge. That's it. All right. It's not gonna be, I'm not taking profits on it or anything like that. If Bitcoin is to fall or going to fall, then that hedge, it should pay me a little bit. At least try to keep the losses down on the price if it is going to fall. Now, on the weekly, it looks good, actually. It looks like it's actually getting a bullish bounce, and that there could be some bullish continuation come from this bounce. However, you can see that you are rejecting on the week. Now, today is just Tuesday, and it can be setting in a low, or it could have yesterday set in the high. We won't know, but as time goes on, we'll keep an eye on it. The level, obviously, that I am watching, or the three main levels that I am currently watching: quarterly support, monthly support, and then monthly support. So, yeah, that's what we're watching. Let me go over here and show you those levels. So there's the quarterly supply that I was just talking about, just showed you on the quarterly chart. Here's old monthly support right there, and then there's the new monthly support down there. So those are the levels that, if Bitcoin is going to maintain this rally, I would like to see it hold support. All right, I'd like to see that happen. When we traded up into it, we rejected this level for multiple days. There was 3 days right there where you rejected. We traded right back down to the old monthly support, and we got another bounce and rejected this monthly level again twice. Broke out, made a new high. We came back in. We haven't quite tested it yet, but upon retesting this level, I definitely want to see it hold as support. If it does hold as support, and then we do end up making a higher high, then yeah, I would like that very much indeed. Basically, when I'm trying to get a directional bias on an asset, I focus on the weekly time frame, and I want to know, are we above or are we below the 21 exponential and the RSI, the 50 marker on the RSI. If we are above those areas, which we currently are, we did close the weekly above. What we need to see now is we need to see this maintained. I want to see the structural integrity of this, what we have currently, stay intact. So I want to see multiple weekly candles closing above the 21 to give me a nice bullish bias, and then we could potentially revisit the prices up there around $30,000. The problem is this was a legit breakdown. So is this just a pullback from the breakdown? It could be, and this could be a trap. All right, that's why I set the hedge. If I get stopped out, I'm okay with that. It's just a hedge, right? Hedges are meant to be placed in order to protect you from any downside risk. Why all of a sudden are we discussing risk? All right, I'm glad you asked me that question. Let's go look at the 10-year right here. It's the 10-year yields. We're at 4.718. As you can see, we're at levels that we have not seen since 2007. All right. So obviously something during the pandemic happened and broke this market, and it's not looking good. Now, why, yields going up? Why is that so bad for Bitcoin? Well, it's bad for bonds, right? Bonds. It's bad for bonds. If we have a continuing strengthening of the dollar and a continuing strengthening of this, bonds could take a dump because your banks and stuff like that hold longer duration contracts, right? These things. All right. So essentially they're long. What happens when they get to the point to where they can no longer sustain those losses? Well, they got to cut their positions. So this drop that we've seen on TLT could get much, much worse. Much, much worse. And that in turn would, in my opinion, break the markets back. All right. So far, it seems like the play has been for all of 2023. Anyways, so far the trade has been to sell bonds and buy tech. I don't understand that trade because to me, it just doesn't seem like the right thing to do because, I mean, you got tech companies now that have valuations that are absolutely unsustainable. But anyways, I mean, that seems to be the trade. If tech rolls over, the market is going with it. If the market goes with it, and potentially Bitcoin will go with the market. Now, I would love to be, a Bitcoin maxi contrarian saying that, if there's nothing else out there, people can't buy bonds, people can't buy tech, people can't buy risk. What can we buy? We can buy Bitcoin. Woo! Yeah. But honestly, with the assault that the US government has been doing on cryptos and Bitcoins, I just don't see that move happening. However, I am long Bitcoin. So the hedge that I have on is less short. So what I mean by that is my positioning in Bitcoin, the hodling that I have, the Bitcoin that I own, I am more long than I am short. I didn't take this position as a normal short day trade. In fact, I haven't been trading Bitcoin recently because it really hasn't been doing anything. We almost made like this 2 days into this month, the monthly candle was like half the size of all of last month's candle, right? So here's your last month's candle. This is what we did in 2 days this month. So I did the percentages. This is like a 6% move. This is a 10% move. So not quite as big, but still almost as big in 2 days. So this month right here, this whole month, Bitcoin, we saw multiple days of Bitcoin trading under 1%. And under 1% isn't really tradable, right? It's got to move, man. It's got to move. If it doesn't move, then you can't make money on it. You just set in chop, and I don't like to set in chop. So we've been trading other things that have been moving. I do have a put on TLT. We'll see if it does end up continuing to go lower. This is what they wanted, was tighter conditions, and we have those tightened conditions. So if this was just a run above this swing high, then Bitcoin will continue lower, right? But if it is actual bullishness for whatever reason, then Bitcoin will continue higher. I mean, it's as simple as that. We're seeing no inflows. All right, that's one important factor to keep in your mind. There is no inflows, and exchange volumes are at 5-year lows still. Okay, still. So we're not seeing an influction of new people into Bitcoin, which is what we would need to see in order to see another rally like we had back in 2020 and 21. You remember how many new people literally came on the scene on Bitcoin while this bull market was going on? Well, a lot. right? Someone I used to associate with had a channel that had like 5,000 subscribers. And then by the time we got to here on Bitcoin's price, he had 100,000 subs. All right. So that's influx of new people coming into the space. It was a ton. And unfortunately, a ton of those people bought up here. So if they're still holding up there, then they're probably going to be Bitcoin holders for life, or at least until prices make another bull run. But we got the halving coming up next year. Yes, we do. I know that. I understand that. I understand everything around it. It's just, this is what Bitcoin's doing. It's trading sideways in a range. So unable to break down, which is good news for the bulls, right? I definitely don't want to see Bitcoin sub 25K, as that would really make me think about maybe cutting my position in half on what I hold. All right. And that would suck if we do in fact get a massive rally after the halving, which has been the historical case for this asset. Every 4 years, there's a halving, Bitcoin moons. Every time it's worked. All right. I don't expect this time to be different, but I'm just preparing myself for this time to be different because this time is different. Meaning we have a higher interest rate environment, higher inflationary environment. We're tight. We're setting at a Fed funds rate of 525, 550. When Bitcoin mooned, we dropped interest rates, right? The Fed had to drop interest rates. So Bitcoin does love a nice pandemic, all right, or something like that. It doesn't necessarily need to be a pandemic, just some kind of market crashing instance that causes the Fed to start cutting rates and do all that jazz. And then Bitcoin might start to moon again. But we'll see. I don't know if it can get this kind of trajectory to the upside, even with the halving, without an inflow of new capital. All right. So as of right now, it's just trading sideways in a range, and it's a pretty tight range, 25 to 30K. And it's been trading in this range ever since March. All right, March, April, May, June, July, August, September, October. So several months we've been trading here, and we'll probably remain in this range until, we get some good news or we get some bad news. There are reports out there that rumors starting to happen that Bitcoin's ETF will be approved, at least one of them soon. That would be good news for Bitcoin, as the company that offers the ETF would need to own the underlying asset in order to basically have the ETF. But that person could already own Bitcoin. That person could have been buying Bitcoin every single time Bitcoin was cheap, right? Every bear market low, essentially. So because Bitcoin is easily tracked that way, if you will, it's very simple to see when you have your bear market lows. Those are places that you want to be a buyer. You can use either a 200 exponential or a 200 simple or a 4-year simple, whatever, right? There are indicators that you can buy that says, hey, yeah, this is typically when Bitcoin is undervalued. This is typically where we want to be a buyer. Like the one metric that I used to use mostly when I was a Glassnode participant was the MVRVZ score. It was a fantastic tool. Basically I was yelling about that from the rooftop for a very long time. So when it got into the buy territory, that was when you needed to be a buyer. That's when we bought, right? We bought the lows and we bought the yearly opening. So we're situated pretty nicely with Bitcoin as far as yearly returns are concerned, and I don't want to lose those yearly returns, right? It's almost the end of the year. We just entered the fourth quarter 2023. My goodness, where has the time gone? Yeah, sitting at your computer screen every single day watching price move around about, time literally just goes flying away. Good morning, traders. Good morning, Buenos Dias, says Potato 730. What's up, dude? I haven't seen you in a while. Good morning, good morning, good morning. What's up, Cassidy, Bill? All right. Let's go look at SPOOs. All right, so here's the SPOOs. Now, the S&P 500 has a expected move today of 28 bucks. Let's go over here. SPX. Here we are, October 3rd. You can see it's got an expected move of $28. Now, with the futures, we've already moved $28. I'm glad I did not short oil. With futures, we have already moved $28. This line down here indicates that. And this line up here indicates $28 move to the upside. But that's from the futures open. All right. The futures open. I like to wait for the SPX to open at 9:30 because that's the measured move for that asset. All right. So the way that it works, I mean, I'm not sure if it, if it's from the open at 9:30, can we expect a $28 move from the upside to the downside, or is it from the futures open? Right here is the futures open. So these two lines, as you can see, we have already hit the downside of the expected move for today. Yesterday's expected move to the upside was right here. So I took a short trade right there yesterday, and as price fell, I took profits. I shorted it with 2 contracts, cut my position in half right around in here, moved my stop to break even, and I had a target of 4,000 to 4,005. 4,300 and 4,305 was my target. You can see that my target was hit. I was $5 off. It went down to 42.95. All right, and the market's open. I do expect a rally. We shall see what will happen. So yeah, let's get over here on this SPX. The prices are not the same. So obviously you're gapping down. All right. So if the prices were the same, it would be much more helpful for me to calculate today's expected move. But they're not. This red line is the week's expected move, and the green line is the week's expected move to the top side. As you can see, we are unchanged essentially on the week. Yesterday, today. Hold on, I got to do something really, really, really quick before I forget. I got to sell these freaking... You're out. What? Got to get rid of them bitches because they were going to kill my account. All right, so there we go. We're up really nicely. Like I said, that trade I took yesterday was good. Here is a year-to-date P&L for anybody that's new. This is a real account. This is what I'm up currently today. All right, so we're going to take some profits. Just bear with me here. I do signal these trades. Right there's a nice $50. We'll go ahead and close him up. Well, I don't know. Do I want to close this guy? Or do I want to leave him open? Let's go check out TLT real quick. We do live trading, real funds, because I do what no other YouTuber does, right? I sometimes will have a paper trading account open to signify my real actual positions. But with this, I am showing you that it is possible to grow a small account if you are broke. This is my P&L year to date. I am up 22% on the year, which is very much higher than the S&P 500 is right now. So I am beating the S&P 500, which puts me in the top 10% of traders out there in the world. Now, I know it's hard to believe because I'm not, the smartest guy out there. but I can trade, and you can too if you just follow simple itty bitty steps that I help teach. Let's go look at the TLT real quick and see if we could potentially bounce, because this thing is rocking and rolling to the downside. I bought the put just wanting to, let's get rid of that, close that. Here's TLT. So it's a $87 put. You know what? I'll leave that. Oh, it's $50. $50 is $50, right? I can always buy another put. Let's go ahead and take our $50 profit. It's 270, 268, 270. That's a damn good day. All right, secure those profits. And then finally, I have an AMD short call. I'm short a call, the 116 strike. So we'll go look at that real quick. Right here, right before earnings, you can see I'm out here, way out here to the 68% line for this given strike, or for this given expiration. There's 31 days left to expiration. And so when I sell a call, essentially I have unlimited upside risk, unlimited risk. That means I could lose an unlimited amount of money, more than I have to give. The P&L on this position is down $10, but it is up on the day $20. So really and truly, all I need for AMD to do is trade sideways to down. As long as we stay under this 116 orange line, then that trade will pay me. It can go all the way up to 115 as long as it happens before expiration, right? I will make money on the trade. But I would have to sit in a loss, because as this trades higher, the premium will go higher too. And what I want is for the premium to go down. I don't understand what's going on. All right, I looked at it. Everything looks good. YouTube is crazy. Everything's good. I have good internet now. So screw off, YouTube. You're crazier than hell. But we can see that AMD has gotten below the 21 exponential moving average. I would love to see that stay there, right? I have a daily res sitting right there at 102.37. So would I take a fresh short on AMD right here? Yeah, potentially I would. And then I would close that short if it closes today above this yesterday's close. It's as simple as that. So if you want to short AMD, you can either do it by buying, the 102 puts. Just like I said, use yesterday's range or yesterday's close as your risk. If you get it that far, then you're probably going to go on up, right? That'll be another breakout above the 21. And that could indicate on the near term that we're going to see a difference in trend. Whereas we have been bearish since roughly right in here. This was a bull trap on AMD. Right here, this was a bull trap. All right. You can see that right here on the oscillator. Whenever you get something like that, it shows you that this is nothing more than a trap. So that way you want to start looking to sell swing highs. This is a swing high if the downtrend is to resolve itself back to the downside. What do I mean by that? Well, price oscillates and then it dumps. And it'll oscillate and then it'll dump. And it'll oscillate and it'll dump. That's the way price moves. So we'll see. But if major markets are doing exactly what I said at the beginning of the stream, if they're selling bonds and buying tech, this is just going to be a pullback. And eventually it will break out. So we are watching this area very closely. Today, like I said, if we close today above yesterday's close, I will be closing that trade out for a loss. All right, it will affect my underlying P&L on the day. All right. So this is only the only position I am in. We will look for a new position while I am live, as long as everything continues to work for me. So any suggestions that you may have, throw them out there. Let's go look at Apple. Apple's. Oh wait, let's look at the advanced decline line. We need to check the advanced decline line for sure. Not the heat map, the index watch, and then that index will be the S&P 500, the 100, sorry, not the 500. I don't use the 500 because this is the top 100 stocks, market caps wise in the S&P. So I can see right here that we have a much more heavily weighted decline day. 79 stocks are declining, whereas 22 stocks are advancing, 24. So this number could change. Obviously, some of these, like this guy here, is just barely down on the day. This guy here is just barely down on the day. This guy there, just barely down, barely down, barely down. You get my point, right? Barely down, barely down. So the advanced decline line will change throughout the day. If it stays heavily correlated this way, then we would be expecting the markets to go down. But they've already had a pretty damn big move to the downside. I mean, you're opening up negative 0.36% on Apple. You're opening down 1.5 or 1.05% on Amazon. Google, you're opening down from yesterday's close. This could just be a retest. I wouldn't look at this level as a demand level because the candle itself is just too damn big. This would be more of a demand zone. But you can see that has already been tested and you got bullish liftoff. This was probably the first attempt to get above the 21 and it rejected. And then boom, yesterday it had a really nice day, closed up on the highs. Very good bullish looking thing there. You did fill the gap, so we would want 133 to hold, as that is the previous day's open. So, and you got the 21 right under you. Google could be potentially a bullish trade. But I do have more of a negative outlook on the marketplace right now because I think if tech rolls over, or I know if tech rolls over, the markets are going with it. All right. VOD long. Let's go look at VOD longs. No, no, no. That thing has got massive momentum to the downside. It would be a good idea. This is something that I would sell calls on if it was a more expensive stock because I mean it's clearly struggling in the $10 area, right? Clearly struggling in the $10 range. Yearly open there. We've looked at this before. No, not a buy. These are potential areas of support down here. They are old weekly supports. So I would at least need it to get to 923, 914, or 905 before I would look to be a buyer on it. And I wouldn't be a buyer on this. I would be a seller. I would be a seller. Because it's got momentum to the downside. Corn. Corn is, yeah, I mean, it's still moving down. Does look like it's found its support here. Oh, we are on a weekly. Shit. All right, so we did have a bear trap right here, but in order to make the bear trap actionable, it would be nicer if this 21 was down here, for instance, and this was up here. That would be more actionable as a buying opportunity. I can't buy it now because it's at the upper edge of the weekly move. I mean, you're trading at the highs of the week so far. Today's just Tuesday. It can go much higher. Let's see what it looks like on the daily. The daily time frame is set for, yeah, you can start buying. So maybe a retest of 22.19 could be a buying opportunity. I don't think that I can trade corn. No. All right, let's do this. Let's do this. This is a free website. It's I like it because you can find gappers. The gap down and gap up list will only populate after 9 a.m. So if you're looking at gap downs and gap up stocks to trade, make sure it's after 9 o'clock. Otherwise, you're going to be looking at yesterday's data. And we want the commitment of traders so that way I can get corn's ticker ZC. All right. So I can go over here to the grid, pull up SAT ZC, corn futures, waiting on data. Not a lot of volume in this. Let's buy to open. Let's see what it would take. It looks like I can buy one of these. Yeah, the buying power would be a $3,000 debit on my buying power. I have $4,000 that I can currently use. So $3,300 would be the cost in order to buy one contract of corn. So I could trade it if I want to. I'm not gonna buy it where it currently is, but we can keep our eyes on it on the chart and see if we do get a pullback. 22.19 would be the area that I would be looking for potential buying ops. Wheat. So I know in TradingView it's just straight up wheat. Yeah, wheat had a very good run when we had the bear market. Come on, internet. You were doing just fine before I started. Here we go. So obviously it got this parabolic move to the upside, like I said, during the 2022 bear market. But since it has came off, and it has came off quite a bit, not exact. There could be many reasons for this. I think somewhere over there in Europe, I'm not going to be specific, but they produce more wheat than anybody else in the world. They call it the bread basket. So, like, they are either A, suppressing demand, or they are simply just not selling as much as they did. So, that's the thing about commodities. They're very seasonal sometimes. The summer was just here, so you should have seen this thing bullish through, the spring and summer months. And it did get a little bullish, but that has since been sold off. So, I mean, the trend on this is down. There's no reason to think that it's going to be changing anytime soon. You did just hit oversold. So you can watch 571 spot 80 for resistance, for places to look for short entries, right? I can't be a buyer until it's showing me at least that it's bullish on the daily time frame. And this is bearish on the weekly and daily time frames. So yeah, I can't buy it. I would have to be a seller. Let's go see what it would cost to do that. I'm pretty sure it's ZW, but we'll go see. Yep, ZW. We'll just put that over here, /ZW. And to sell one contract would cost. Count does not have sufficient buying power available for this order. So I can't trade wheat with a $6,200 account. I can't trade it. So yeah, I can't tell you what it is because for some reason tastytrade don't tell me how much it costs to trade this per one contract. Right? I don't know. So I can't trade it. But if I could, I would be more of a seller than a buyer. Alcoa. It's down on a year. It's had a pretty brutal couple years. It's in a bear trend, but it is trying to break out. I know these are old levels. We were looking for a liquidation of that wick. We got more than that. You got downside continuation. You've just been kind of chopping around here. You got overhead resistance, weekly res setting at 2906. So could I buy it where it currently is? No. But on the daily, it's starting to get to the point where, yeah, maybe I could if we break out above 2906, come back in for a retest. As long as that area holds as support, then you could look to be a buyer of it. But as of right now, it's just not a trade. If you were already in the position on the open, then yes, take profits because you're coming into daily res right now. Now, it doesn't mean it's going to stop at daily res, right? But it is daily res. That's where she closed yesterday. So it could fail there again. If you get there, you want to take profits, especially if you bought it at the open. Gold on the yearly open, will it hold? That is a very good question, one that I cannot answer. Just because I am a profitable trader, it does not mean that I know what price is going to do, ever. Probably not. As long as the dollar is ripping. See, we were talking about gold when it was over here, and this was a very important area for gold to hold. And it did not, right? It did not. It broke down, and now you're seeing it literally drop like a stone in water. No, as long as you have dollar strength, I would not be a buyer of gold. But we can look and see that this is like going to be the second time that it's tested third time that it's tested the yearly open. So yeah, it could hold. You could get a bounce here, but I expect that bounce will be faded. All right. You can potentially get long on gold. You're massively oversold, though. I wouldn't advise it just because it's coming into this level. Because there's really not all the overhead resistance that we were watching on the DXY to hold didn't. Right? Didn't. It's busted out of every single thing that we was watching for it to hold. It did not hold. Is the dollar going to turn around now? It's possible. I mean, it's done more than liquidate last month's high, and it has a long way to go to liquidate another monthly high. There's a 2-week high right there at 107. I don't know. If it closes up this week, that would be the 12th straight week that the dollar has been bullish. It's only happened one other time in history. Back in 2014. So, I mean, yeah, everybody's expecting the dollar to pull back at some point. We just don't know when it's going to pull back. But right here is weekly res. So we'll see how does it close in reference to 107.02. This level right there. If that holds and then starts to pull back, then yes, I would say maybe you get a small 2 or 3 day bounce on gold from the yearly opening range. But what you could do is obviously you could buy gold and then use today's low as your stop loss, right? Because I know this is a CFD, and I know that a lot of people are allowed to trade CFDs in other regions of the world. So I mean, you're buying a bounce that's already occurred, but you could make this a 1% loss, right? You could absolutely make this a 1% loss. You could buy it here, put your stop there. A 2-to-1 risk to reward would put you roughly around 1857. We could look real quick what it would be. So you would need it to bounce up to 1856 to be close to a 2-to-1 risk to reward. And it's possible. Let's go look at last week's range. I don't like it as much. I mean, you're still working on this weekly, but it puts you above the weekly open. So you'd literally need a breakout in order to achieve your target. And I typically don't like trades like that, right? You would need it to break out above the weekly open in order to achieve your profit target. It's not really a great trade. What I would do is just, give gold a second, right? Yearly openings are good places to look to be a buyer, but like this would have been the spot to do it, right? Over here, things have changed. You've had nothing but straight dollar strength. Gold was holding its own over here while the dollar was ripping. This is true. However, you can see last week was a very bad week for gold. And this week you're getting downside continuation. So you're literally trying to buy a falling knife. And it has momentum. So I would be very careful on gold. All right. Look at silver. Silver, same thing, same scenario, same everything, right? Actually, silver's bearish on the year. It's bearish on the weekly. It's probably bearish on the daily. It is. You're probably oversold. You are. I mean, yeah, same thing. You've gotten 2 massive weeks of downside. There is weekly support right there. Or you could find support here, which would be demand on a weekly basis. So what I would have to do on silver is I would have to wait until this weekly closes. And it would need to close above 21.27. And then I could potentially buy a retest of 21.27. I wouldn't. But if you have to buy silver because you just have to, that's the way I would play it. I wouldn't because it's obviously in a downtrend, right? I mean, it was making lower highs, lower highs, lower highs, and then she's broke down 2 big, strong weeks of downside continuation. What you're seeing now would be, dollar pullback, potentially give you an opportunity for a silver bounce. Maximum profit target for me would have to be last week's close, which is 22.17. Go in there on the daily and look. You're testing that weekly level of demand right now, and it's actually acting as resistance. So, yeah, I mean, 2 big moves to the downside Is it going to bounce? Potentially. We'll see. Bitcoin's turning green on the day. That's good. It went from red to green. Will it hold? We don't know. But there's no reason to buy it here, except for you did make daily support yesterday. So one could arguably say, as long as you're not closing many hourlies under this level anymore, then you could potentially buy it if you expect Bitcoin to continue, if you expect this just to be a pullback, right? This is the level I would like to watch it form support at, 27 to 23. This is just support from yesterday's close. It is support, potentially, if it holds. One could arguably buy there, stop there. Profit target would be 27,977, or just call it an even 28K on Bitcoin. I don't like silver at all for a buy. Riot dumping at the open. Yep. Let's go look at it. Good short there, Tom. I love it when people actually short when something's in an obvious downtrend. It just makes my heart flutter with joy. Right? Flutter with joy. So right in here would have been the ultimate perfect, beautiful short around 1150, based on the fact that Bitcoin priced this move out at that point in time. So it was almost a guaranteed fact that Riot would eventually also price that move out as well. And it did right there. So good job shorting this, not getting faked out by that move to the upside. I think you're sitting pretty on it. I would just hold it. Take profits, as always. Take profits because you're coming back and you're potentially testing last week's close, and that could act as an area of potential support. So $9.33 is that spot where you would be like, it's also daily demand. Not quite, not perfect daily demand, but it's close enough. Close enough. So, yeah, I would take profits and then move my stop to break even. So that way, if you do get another bounce, you can always take another short position on it. It's getting low, but as far as being up on the year, I mean, from $9 to $3.49, can it happen again? Oh, yeah. It can go much lower, right? So, I mean, there's still plenty of meat on the bone. You can only ever make 100% on a short. You can't make more than that unless you're levered up. Whatever leverage you use, just times that by 100, and that's how much you can potentially make. With stocks, generally the leverage, the highest leverage one can achieve is 6x, so that would be a 600% gain if Riot is to go to zero, which I don't think it is, because I don't think Bitcoin's going to zero. And they're huge miners now, so, or a huge mining company. So it's going to fluctuate, pretty much correlated with Bitcoin. So yeah, we'll see how that plays out. I took a Mara short that was fantastically beautiful. Same scenario. I shorted it on this day right here based on the fact that Mara had not priced this move out yet, and Bitcoin did. And within 2 days, my trade was done. Boom, boom. Priced this whole candle out, and I got out of the short. But that was because it was a long, short call, so there's a maximum amount of profitability that I could have made on that trade. I probably should have bought puts instead in hindsight and held them. But hey, what can we do, right? What can we do? Jolts, 10 o'clock. What is it doing to the spoos? Oh, man. Woo! Look at that volatility. All right, where's the open? Here is the open. So we need $28. All right, so it could go much lower. You could see a low target today on this boost, 42.41. We can go up $28 as well. Give us an upside target. Be roughly right there. So this is the intraday target. Highs, lows. So you didn't even get up to, this is where you would be a seller right now on the S&P 500 since it is trending down, right? Lower highs, lower lows. You would want to be a seller. 42.98 is the area that I would be looking to sell. This could just be running yesterday's low. I didn't look at the data. Let's go see if it was good or bad. According to this, it looks like it was bad. It was bullish for the dollar. Like anybody, why would I care about Brazil's industrial production? All right, so right here it says a reading that is stronger than forecast is generally supportive, aka bullish for the dollar. So we got a very bullish dollar move based on the JOLTS data. They were predicting we had 8.92 last month. They were predicting 8.8. We got 9.61. Job openings. So literally too many, right? Too many openings. Not enough workers to fill those jobs. That's why unemployment is not going up, because there's just too much jobs, dude. Nobody wants to work anymore, huh? Gen Zers. They want to be Twitter stars and stuff. They don't want to work. So there we have it. Dollar breaking out to the upside. Everybody that's trying to short this thing or find the top just got wrecked. My Aussie dollar short, though, looking good, son. Looking good. I shorted Aussie dollar at 0.67394. I am still holding that position. This is a fresh yearly low on the Aussie dollar. Love it. Love it to death. We were talking about this thing breaking either to the upside or to the downside, and we got our answer. So I could see this thing moving as low as 58. 58's kind of far. Let's see. Maybe 61. Maybe 61. It would get us under this massive swing low there. But not looking good. Not looking good at all. Euro USD getting crushed too. Just look at that. If you guys stop trying to buy bottoms, you'll do much better in life. I promise you. Sell swing highs. This one would have been much more difficult to catch a short. You can obviously see where I was watching for a short entry, one spot 07756. It never got tagged, so I was unable to get in that short position, which it's okay because I am in a short position on Aussie dollar and I'm also in a short position on pound dollar. So, I mean, yeah, pound is bearish on the year now. Euro is bearish on the year now. See this bounce right here? I can't pronounce your name. Januzz. So Januz, maybe. I'm sorry if I am mispronouncing your name, but this is what could happen with gold at the yearly open, right? You could get a multiple day bounce. Like here, you got a 3 day bounce, right? But then ultimately, 2 or 3 days later, breakdown it goes. So just be careful trading gold right now while we have such a strong dollar. Like you would be getting stopped out of that position already almost. Let's see if it did. Yeah, not quite, but you would be getting close to getting stopped out of that trade already based on the JOLTS data, which I totally forgot about when I started the stream. Let's go look at Tesla getting killed. Not too bad, though. It had a really nice day yesterday. It's not getting killed yet. Let's go look at the Magnificent Seven. Again. Ooh, Apple. Yeah. Bye-bye to the spoos. Meta. Google and Meta, the ones that I closed this trade down. It got filled on the open because it just wasn't working. But I do expect it to ultimately roll over if the rest of tech does. We've already seen Microsoft do it. Like Microsoft is an obvious short. Nvidia is not quite yet. You got to take out this swing low right there, and you will have lower lows, lower highs. Tesla, same scenario. Tesla's got a long ways to go before you can say that it's making lower lows and lower highs. Netflix, lower lows, lower highs. You've taken out that June or August's low. August's low is it's the same low on everything. So you can see that Microsoft and other assets, Apple, have already taken that low out, whereas Tesla has more meat on the bone for a short. So let's see if we can put a Tesla spread on. We want to trade it. Oh, you gotta be kidding me. Son of a... Thanks a lot. I wasn't trying to exit the app. What's up, Michelle? All right. So we got it. We got it. We good. We got it. We good. And we want to trade table mode. Oh, we can't trade it. It's got earnings coming up in a few days. But you know what? They're probably not going to make earnings thanks to Johan. This will probably be blurry. Let's see. Tesla reports fall in the third quarter deliveries, misses estimates. So they missed market estimates for third quarter deliveries on Monday as the automaker was forced to curb production due to planned factory slowdowns. The electric vehicle maker handed over 4,035, we'll just call it 435,000 vehicles in the 3 months to September 30, down 6.7% from the preceding quarter. Wall Street, on average, had expected Tesla to deliver 454,000 vehicles, according to 19 analysts polled by Visible Alpha. So they're probably going to miss on earnings, but we'll look and see if we can't get a put spread on it for a decent amount of money. The strikes are $5 wide, so it's going to be impossible to get it under $1.30. So whenever I build a spread, my common theme that I want is I don't like paying more than $1.30 for it. If I can't get it for $1.30, then I don't do it. This would be the best spread to take. We could try to get a lower one. See that? By going lower, it lowers the amount of money. And this one isn't bad. As you can see here, it's got a max loss of 173 and it's got a max profit of 327. So 1-to-1 essentially. 172 is still a little bit more expensive than I would like, but you need it to get well beyond 230 in order to make this trade profitable. Right here is 230. And we can analyze that trade. So in order to make even half of our, well, a little bit more than half of our projected or theoretical P&L, you would need it to move one standard deviation. So you would need price to drop all the way to 205 to make 216 of those $329. All right. So that's where we need price to go for this particular spread to pay us. What was it? We'll just call it 205. One standard deviation, 205. So you would need to make fresh lows, and this would have to happen in a month, which it could if they miss on earnings. Okay? Which we've just read that there's a high probability of that occurring. Probability of profit on this trade, not good. It's probably going to be, where's it at? 40%. The probability of profit on this trade is less than 50%. It's 40%. But if I was going to put it on, this is the one that I would put on. All right. Go back to the table and show you the strikes again. That way, if you want to short Tesla, but you don't want to get killed by all of Tesla's insane volatility, it will cap your downside risk. All right. But it's kind of a faraway spread. It's a $5 wide spread. So the less you pay for it here, the more you will make here. So if you were to drop this down to like 155, 145, price would need to drop severely before you would get filled, but you could try it. I'm not going to put it on just because Tesla has a way of kicking my ass. Historically, Tesla has beat me up. All right. Historically, it has beat me up. It's a very volatile stock, and I used to try to trade it like everybody else before I really focused on my trading career and started to actually get profitable. I would struggle with this thing because I would buy just a put or a call, and I'd buy way out of the money crap. Like I would be like 2 weeks out trying to get the probability of profit on my trades were like 1%, 2%, like a 2% chance of making money on the trade. So yeah, you got to up those probabilities. This is kind of a low probability trade. If you're not afraid to, to go ahead and do this one, you're paying more for it. So it's drastically going to reduce your max reward profit, right? Your max reward, max loss. It's going to be pretty much the same depending on where you get filled. That's why I dropped strikes to get them cheaper, and that will give you a much better profit target. And 31 days. So if they miss on earnings and it drops hard, theoretically, you can make a couple $100 on it if price were to get down to 205. What just happened to JPY? Let's go look at it, because somebody said that they were talking about stopping their yield curve controls. I don't know if I'd call that interjection or not. But this also coming in a time with DXY strength. But now DXY is pulling back. Yeah, there's something going on. Something going on. They might have, if they might have done something to their yield curve controls. It's not doing anything really. I guess it's just that's just based on the USD move. It's bearish on the day. It's bearish on the day, bro. So nope, nothing crazy happened. It's just dollar weakness. We did get a nice bout of dollar strength, but then it got hammered. That's a pretty damn big move, though. That would have been a nice short. I mean, it's impossible to time these things perfectly, but that's a 282 pip move from high to low, which is well beyond what this thing usually does. Yesterday, it moved 52 pips. That's your norm. 250 pips in a day is not your norm. When I shorted it over here, that candle moved over 500 pips. This candle here, in one day, this thing dropped 574 pips. Insane. That's like a 10x move from its standard deviations. Crazy. I would say it's just dollar volatility. I mean, the 150 level is like, a lot of people are watching that short. But I would not be surprised if this does not get bought right back up, guys. Unless you hear an announcement where the bank BOJ literally is changing their monetary policy, then you can short this. But as long as their monetary policy remains the same, then you can't, because the dollar's just strong, and the BOJ is, and the yen is weak. But you can see once that 150 handle got hit, boom, they crushed it. What's the high on that candle? 150.16. Right there. That's the high on today's candle. It hit 150 and puked. Nice. Yeah, crazy vol. Yeah, and that's another thing about Tesla also. It's got really high volatility, implied volatility, 58.5%. So just be careful. I would love to trade Tesla. It's just That's a little bit too far down. It's still needed to go a long ways. Yeah, that's the same trade I just had on. I don't like it. Because that's such a huge move that you need in order to make money on the trade. Intervention, says Michelle. She's talking about the BOJ. I don't know. I doubt it because the yen hasn't done anything. I'd say this is more of just a very volatile move because people were short that 150 handle. Or long the 150 handle, right? It's just volatility from the DXY. I mean, when you have 12 straight weeks in a row up, you gotta assume that you're gonna have a crazy volatile pullback. What's oil doing? Can we trade oil? No, not really. We need to see how today closes. If oil closes back above 89.19, we'll watch 89.19 for retests. But I would much rather be a buyer down here at 86.36 on oil. Let it form sort of a bear trap like it did here. And then we could buy it. We'll buy calls on the micro crude oil futures. Did you get stopped out, or did you make nice money, run mountains, and you know better? BOJ intervened. I mean, it's possible, but the BOJ, I mean, the yen hasn't done anything, just the dollar, which would be the case if the yen just sold a lot of US dollars, right? If the BOJ just decided to sell, like, I don't know, $50 billion US dollars, it wouldn't have much effect on its own currency, but it would indeed affect the USD JPY. But you can see you don't have that volatility on the yen, which is why it's hard for me to believe that the BOJ intervened. More or less, the 150 level was just a massive level. All right. I mean, everybody was they were talking about it on Bloomberg this morning. So people were probably just all over that 150 spot. But it'll probably retrace. Brian just filled on a bunch of AMDs. Yeah, I like the rejection it's getting. I definitely like that. Max profit on this trade, if AMD does roll over, is 164. $164. That's the max amount of profit that I can make on the trade. But it's about slow, methodical returns. That's how you get consistently profitable over time. That's your objective, to be able to beat the S&P 500. Once you can do that, you can go get funded at a prop firm pretty much anywhere in the world. If you don't have enough money to trade your own book, then you can trade prop money. Or you can get your license and manage money right? If you have a huge following and people know that you're profitable, people ask me to trade their money all the time. I just don't want the headache. I like trading my own book. I don't have a boss. If I decide I do not feel like trading today, or since I've already more than hit my profit target on the day, my profit target on the day is 1% of the total account's equity. So that would be what, $61? I've more than hit $61. But I do need to put more trades on now. So we need to find a trade, a legit trade. Let's go look at I'll leave this one on because I do like what I'm seeing out of AMD. But if the dollar pulls back, like if the dollar has sort of like a blow-offy type of top, this could potentially find support and go. But it is a swing high in the context of a downtrend. So I like it lower, but I don't always get what I want. But this is where you would be short, right? You would short somewhere in here. This is how you need to train your brain to think, right? It's not really a downtrend. Yeah, it is. You know what I mean? It's moving lower. It's making lower highs and lower lows. Lower high, lower low. Is this going to be another lower high, or are we going to see another lower low? Don't know. Things could change, but that's definitely how you need to view the markets. That's definitely where you need to be placing trades. Now, if you get stopped out, you get stopped out. You just find the next one. Let's run a scan for unusual options activity. This is still pretty heavily bearish. You got 79 stocks declining, 22 advancing, and a lot of these are declining pretty massively. So let's run a scan, and we will run a what? I can't help it. The mower guy's here. What do you want me to do? You want me to go out there and shoot him in the face? My cat does not like it when the mower guy's here because he don't like loud noises. He wants to sit and lay around on the porch all day. All right. There is unusual options activity happening in AMD right now. Looks like puts and calls October 6th. So that's this week. There's no way for me to know if people are buying or selling. But you got AMD here. And then there's your volumes right there. 3051 puts. And then you got 4980 calls. But that's pretty much it. I can't believe Mara has some unusual activity, option activity. Same expiration here on the calls, and then next week's expiration on the $9 calls on Mara, Marvel, and Micron, and Nvidia. These are Ox 6s, so 3 days away expirations. Yeah. Yeah, these are near term, so I don't know what's going on with that. Not much happening in the world of options today. Let me see here. Don't need any announcement. I understand that, but what you got to understand is I'm also monitoring the yen, right? And the yen would need to become extremely bullish in order for that dollar yen move. The dollar has to become bearish, and the yen has to become bullish in order for that move to sustain any sort of relevant down move. We can look at that because we got the currency futures right here. Technically, that dollar yen move that you saw, if the dollar stays up 0.05% and the yen stays down negative 0.12%, that move will go up. It will get bought back up. The trade would be to long the low. Right? That would be the trade. This move will get faded if those numbers stay the same. Because it's literally impossible for this to drop. I mean, that's just a lot of volatility came in, a lot of orders, but it will get faded. The market will correct itself if the dollar stays up and the yen stays negative, because that's what sustains a bullish rally. So this move down here was probably bought up. I wouldn't doubt it if this thing closes bullish today. If the yen stays negative and the dollar stays positive. Now, if the yen gets positive and the dollar gets negative, then you got something to talk about. But until that happens, there's nothing to say. There's really nothing to say. Right? So if you want to short this, if you think it's going to go lower, then you need to get a watch list built. I call it currency futures because that's what it is. There's the ticker symbols. S6S1 exclamation point. That's for the Swiss franc, euro, pound, yen. The yen is still negative 0.13 on the downside, weak, whereas the dollar is still positive. These numbers have to flip. This number has to go up, and this number has to go down in order for this to roll over. It has to. Has to. So until that happens, I wouldn't even think about shorting it. I'm not going to short it. Well, I'm actually already short, but I've been holding that trade since 2022. I shorted it up here because we knew they were going to intervene. That's what I'm saying. We don't know what's going on with it. Now, they could have just dumped dollars, but I would expect to see that in a big, nasty, dirty, bearish dollar candle. And that just ain't a really big, nasty, bearish dollar candle, is it? Nope. But if it ends up looking like this candle at the end of the day, then things may change. But as of right now, I just call it a volatility spike. Current Forex positions that I am holding are USD JPY short from 2022, Aussie dollar short, pound dollar short, and USD CHF long. Those are the positions that I'm currently in. We bought USD CHF at 87839, which was daily support. I don't remember exactly which day we bought it on, but it was in this area that we bought it. Because this day almost stopped me out. But it's tagged the early opening range. It's doing good. It could roll over here if the dollar pulls back and the Swiss franc gets strong again. But I just don't know if that's going to happen. The Swiss franc's current interest rate is 1.75%, whereas the US dollar interest rate is 5.5%. So that makes this a carry trade to the upside and a very favorable one. I mean, you got what, 1.7 and then 5.5. You got 3.25% interest rate differential there. So they can make 3.25% on alpha just by simply getting long this product and holding it. Awesome stuff. Yeah, 300 pip drop. It was a very big spike for sure. Yeah, move stop, took profits, tight stop loss, trade based 150. Nice. That's what everybody is doing, obviously. Win dollar was super strong. It just touched the old high and suddenly bumped. Euro yen, pound yen, USD, GBP all dropped same time. Yeah. So it's because they're all paired. Like the dollar is just one big basket of currencies, the XY. Everything's tied into it. So yeah. But like I said, as long as the yen is weak and the dollar is not, then that won't get any continuation. But the dollar is weakening, so all you need is for the dollar to be weaker than the yen and you'll get downside continuation. But anyways, let's see something here. Let's roll through the let's look at Apple real quick. Apple's pretty much size move to the downside. I don't want to go through every one of these again. AbbVie getting crushed. Oh, did y'all notice XLU yesterday? By any chance? Did you see the move on XLU yesterday? Like, what the hell happened there? I think that's probably one of the biggest moves I've seen on XLU. That's over a 5% move to the downside. I know why. No, it's not EEM. Well, what is it? What is it? It's EE something. Knee, I think. Any. Yeah. Knee. It's a utility company, I guess. Next Era Energy. I mean, with oil going up, you would think that these things would be going up too, but these people like Duke, for instance, Duke Energy, they put up power poles and power lines, right? They build infrastructure. The same with AEP. There you go. All these are utility power companies. They're all getting killed right now for some reason. So it caused XLU to dump. All right, so now the internet's going all wacko. All right, so we'll go ahead and end the stream. If I find anything worth trading, because the internet's starting to get crazy here, I'll just post it on Twitter. And then for the rest of you guys in the Discord, obviously, you'll get the post first. But we'll go ahead and wrap it up there since my cat is bothering me and we've been going for an hour and a half. Keep your eyes on, I guess, dollar yen or other pairs versus the yen. Like I said, what you want to see is you want to see the actual yen futures strengthen up. That'll put some backbone into that move. Other than that, it'll probably just get faded. But with that, I'll go ahead and end it. Make sure you guys trade safe. Got on late. Did you cover Tesla by chance? I did, John. You can just watch the replay. I covered it, went in depth. I even showed a trade that one could take on it using options. All right. Thank you guys so much for being here. I'll be live again on Thursday. We'll see what we got then. Make sure you show up. Thank you so much for your time. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.